Well, thank you, Robin, for the introduction, and we're very pleased to have you on the SMP committee as well. Well, thanks, first of all, to FCM and Ninos Hagirujos for extending this invitation to be here at the SMP, to the XMP Committee of IFAC and myself. Buon pomeriggio a tutti. Good afternoon to everybody. I've been asked to address the relationship between accounting and tax, come up with an easy solution, and possibly do it in 15 minutes, which is... Oh, 20. Oh, that changes dramatically my perspective. So it was not an easy task, but I decided to take this challenge, and we will try to work together through this topic. I'm also lucky because many of the speakers before me this morning and this afternoon have addressed many of the topics I wanted to cover, so I will be able to skip through many of them. And I must say that your ancestors this morning also already gave a very good introduction of IFAC. And so I actually don't need to mention any longer that in the mission of IFAC, we say that we want to contribute to the development, adoption, and implementation of high-quality international standards and guidance. This is core in the mission of IFAC. I also wanted to say a few words about the IFAC Small Medium Practices Committee, and I would like to thank Joran for also saying a few words this morning about our committee. Our main aims are to participate in policy making and regulatory dialogue and input to development of international standards. And in doing this, we are very concerned that standards and regulation is proportionate to the size and dimension of small and medium enterprises, and that it is kept stable, that it doesn't keep constantly changing, so that no excessive training costs and updating costs are put on SMPs and SMEs, and that it is relevant to the needs of SMEs. We also aim to raise awareness of the importance of the SME sector and the role of SMPs. This is what we call voice and visibility, and provide practical support to SMPs. I just wanted to invite you to go take a look at our new web page, which is hosted on IFAC's newly redesigned website. We have a homepage for the Small and Medium Practices Committee. You will be able to do many things there, to download for free all of our guides and publications. You will be able to join our discussion board, follow us on Twitter, and interact with us. So please pay us a visit. We'll be delighted to see you on our website. Going to our topic of the day, we will try to address in this very short time the links between financial and tax reporting and the issue of compliance costs. And compliance also varies widely with the business dimension, and business dimension varies widely within SMEs because we have the small, the medium, and we also have the micros. And we will try to look at possible solutions based on a conventional approach, maybe on fresher ideas. Actually, the case for associating tax and financial reporting is attractive, at least at first sight, because alignment would, of course, bring simplicity, cut compliance costs, and reduce avoidance. But still, we must face the fact that financial reporting and tax reporting have totally different objectives. The main purpose of financial reporting is to provide a true and fair view of the capacity of a business to generate profits, while the main purpose of tax reporting is to raise money for governments, which is a totally different story. Financial reporting is essential in a well-functioning market economy. And so because of this, probably financial reporting should not be unduly influenced by external factors like tax policy considerations. And there also is worldwide convergence on the fact that financial reporting regulation is a major policy objective. I mean, this was confirmed no later than the G20 meeting in Cannes a few weeks ago. And clearly, this convergence is poorly compatible with strong links within financial and tax reporting. The fact that we have compulsory reporting regulations, both for financial reporting and tax reporting, brings a burden, or costs at least, on enterprises. And most of the times, a significant part of the burden is not in the taxes being paid, but in the compliance costs being put on small and medium enterprises. And compliance costs are largely regressive. That's another important thing to notice. Compliance costs seems to be an issue from New Zealand, you will see this in these charts, to Canada, including other countries like the UK and the EU. The amount of paperwork seems to be worry number one for small medium enterprises. If you look at this data from the UK, you see that while compliance costs are a negligible amount of turnover for large companies, they are a significant cost, significant percentage of turnover for smaller entities. And we have data from the European Union confirming this as well. And another important thing to consider is that when we consider tax compliance and compliance costs, the cost of compliance is one of the factors keeping some of the enterprises away from the formal economy and into the informal shadow economy. This is also important to consider. And small and medium enterprises vary widely in size. And clearly, when we talk about compliance costs, the biggest challenge is for the micro and small part of the SME market. Also, the needs of SMEs and users of financial reporting vary with the size of an SME. Probably micro and small enterprises most frequently use financial reporting to access finance, and users of those reporting would most probably be banks or state-guaranteed loan schemes. So clearly we have a difference between providers of finance, which are most frequently the user and stakeholders in the case of small and medium enterprises, and investors, which might more be concerned with medium and large companies.